Good morning. Welcome to the Brew. It's Thursday. That means Traders Workshop and Jason and Mark. Today, we're going to tackle something interesting, I think. If you were a technical analyst and could pick direction well, could only use options, what sort of strategies would you employ? Let's break that down after the opening bell. Oh, I don't get the music today.
Oh,
man.
copyright issues.
How are you?
All right, Lex, how you doing?
I'm doing well. So no Mark. First of all, no Mark. I don't know if you saw the email.
I did.
Okay. So yeah, he has how do we say, baby duties. Sick wife, little kids. So what are you gonna do, right? But he did put his 2 cents worth in, I noticed. So we'll get to that.
Oh yeah. He put his 2 cents in, and it said, "I don't believe you. Technical analysts can't pick the direction of the market."
Yeah, but
that's essentially what he said.
I certainly cannot. I'm not a technical analyst. Why do you think that is, by the way, from my background? Any ideas?
Because you are a market maker.
Bingo. So why do I care about direction?
Right.
I care about, what's for lunch. That's what I care about, because all we had to do was, I don't want to make it sound easy. Buy bids, sell offers, and manage risk. So the hard part about that is managing the risk, right?
Right.
So we weren't directional, let's say, but when you come to the retail world and you need a trade idea, something to generate a reason for you to make a trade, whatever it is, a directional bias can help, right? But there's also pitfalls, as Mark mentioned in his email, that he doesn't believe that you can do that for any sustained length of time.
Right. Not for technical analysts particularly, it seems.
Yeah. So what are your thoughts about the trade idea generator relative to, first of all, is this any good? And then second, if we knew, let's pretend we had the crystal ball and we did know direction, what trade are we going to make? And I know there's some what ifs that we have to go over, and we'll do that. So
yeah. So statistically speaking, and I'm drawing on my econometrics background a little bit here. Technical analysis has not ever shown any kind of correlation. And I think it's probably mostly because it's hard to study it. I mean, let's say you just have a trend line, right? Just like trend line technical analysis.
Yep.
And, there's a lot of observed behavior with it. I know technical analysis is, called, I guess, in circles, like it's horoscopes for men, because as you approach the trend line, you're like, okay, it could either bounce off the trend line, break the trend line, or have a fake breakout, or just not reach it. And that covers 100% of the outcomes that is even possible, right?
Right. Mm-hmm.
So it's kind of like it's almost like observed behavior, I think technical analysis is for the most part. But I think that there is merit to it in that it helps trade plan. I think that a lot of technical analysts are not as much experts in technical analysis as much as they are in risk management and trade planning. They have like a good risk management plan for any of those 4 outcomes, and all 4 of those outcomes are the only ones that are possible. So I think that
these are all good points, by the way, and they line up with what Mark was saying too. We'll explain that in a sec. But go ahead. Sorry.
So I mean, that's kind of overall, that's my impression of technical analysis. I have never seen any kind of real statistical analysis that is validated much. I think the only one that you can even say anything about is momentum, but I don't know if that's really like price action thing versus technical analysis. Usually when I think of technical analysis, I think of like candlesticks and, bullish engulfing or, Ichimura candles and stuff like that. Ultimately, they're just different ways of visualizing price.
Yeah. All good points. So here's my issue. And I'm not going to pretend to understand it completely, because I think I don't. But my issue is this with technical analysis. People say there's lagging indicators and leading indicators. And the leading ones I don't understand, because how do they lead? And give me a view into direction. So I always think even the leading ones tend to be lagging in my mind. But again, I am willing to be educated on this, and I hope I'm wrong, because I'd love to learn something that can give me an edge for sure.
Yeah. So personally, I don't. First of all, I don't trust much when it comes to technical analysis unless it has something to do with flow. If you can explain to me why, it's sometimes there's like price levels that you can tell price bounces off of quite a bit, and
Yep.
you can at least say, okay, there's probably some flow reason why that level is an issue to pass, or support, resistance.
Sure.
But and here I'll flag Volland here a little bit. What
Mhm.
Volland attempts to do is identify option dealer flows, like what they are going to be doing in the future. And so a lot of times, I consider aggregate Vanna, which we talked about on prior episodes, a leading indicator. But the
Right.
problem is that how much does it lead? Like you can say it leads like 4 weeks, 6 weeks, 8 weeks. There's a lot of environmental things that you have to look at that alter those flows.
Yep.
So you kind of have to take that into context.
Mhm.
I know there's a lot of fundamental macro indicators that people say are leading indicators. Stuff like the inverted yield curve is supposed to lead a recession, or and stuff like that. But we've had an inverted yield curve now for how long? Like 6-7 years.
Yep.
Still haven't seen a recession. So how long does that lead? I think the only time really leading indicators can actually even help you in your trading is you have to have 100% faith in them, and you have to trust the math behind them.
Yeah.
But I think like a lot of people have too short of a time frame in their investment in order to trust leading indicators for too long. Like leading indicator is stating that the market is reaching a top, but it still hasn't reached its top. You kind of sit there, how long will the market not reach its top before it happens? So
Right.
I think that there's ultimately trade planning is the number one thing, but assuming that we have some sort of edge, I guess we'll go into the next question. Assuming we have some sort of edge,
Right.
and know exactly where, when, and how the market is going to get to a price, I mean, options are a great way to trade it.
Yeah. So let's hold off on that for a sec, though, because and just finish this up. So don't. And I don't want the folks to feel that we're bashing technical analysis at all. So we're really not. It's just something that I personally don't understand a whole lot. You understand a lot better than I do, but you don't necessarily place a lot of faith in it. But I would say that there are some very, very good, and if not great, retail traders who use technical analysis well, and they make a lot of money. So maybe there's something there. I don't know. But it could be. And Mark's point that he wanted us to convey is that if you are really, really good at this analysis, you're probably not setting yourself up for home runs. The real skill in this equation, you already alluded to it, is the management of risk. And you have to know how to manage the ones that don't work, right? Which is the hard part, in my opinion, versus the ones that do work. So if you can become a very good, solid risk manager using this technical analysis, then you should be doing something that's repeatable. And his point was home runs are not repeatable, which I agree with 100%.
Yeah, right? I think home runs are a lot of times people try to, I think it's like different styles though too. And home runs are repeatable, but you lose a lot more than you win. I mean, just like in a probability sense. So you have to still manage your risk, even if you're going for home runs, that, you're still solvent when the home run hits. Right. I mean, you could sit there and strike out, you could be Mark Reynolds all you want, MLB strikeout king, but a hitter. But he hits home runs. Like he hits 30 home. He used to anyway. He hit 30 home runs and struck out 250 times every year. So
yep. No, I think that's a good point too. So a good takeaway there is again, not bashing technical analysis. If you're good at it, great. Manage, trade plan. You said it. Mm-hmm. You said it earlier. I totally agree with that. That's one of my weaknesses because I never had to do it. Is have a trade plan. I don't have a trade plan. I just keep moving. I was able to keep moving and swimming in the stream because of order flow. So order flow took me out of a lot of my problems anyway, right?
Yeah.
So, but that's not true for retail folks. You don't have that ability. So the trade plan's critical, really critical. Stick to it, right? Okay, let's move to the next phase of this. Let's pretend, and I might even share a screen here. You never know with me. Wait till you see my chicken scratch.
You can share screen. Oh, I thought you were gonna
This is
let's
classic.
pretend. Woo.
Yeah, this is class. Wait till you see my chicken scratch.
Oh,
let's pretend. I have to share my screen now. Hold on. I'm doing it. I swear I am. I swear. Do I do the whole screen? No, I just do a window. Let's do this guy. Ready?
I'm ready. Oh, I'm waiting.
Maybe Ruben can send that in for us. Look at this. This is amazing.
What is the P there for? Pigeon feet?
That's for pigeons or price. Okay, so what this is supposed to be is a graph of a chart. Okay, and I got some little candles here, which I can't have the ability.
Candles.
Yeah, these are candles. I don't have the ability to do up candles and down candles. They only have a black marker. That's all it does. But here's two price levels. Here's this level, and here's where we could enter. Let's pretend the technical analysis said, get in here, right?
Yeah.
And somehow the technical analysis says, close it here. So we're opening here, and we want to close here, right? Now, first of all, what we need to define, well, I'll let you say what we think we need to define. My guess, first of all, is let's assume we feel very comfortable about this in terms of the analysis, and we want to get in on that trade. My first question to the trader is, what is this distance? How far is it? Is it 30 cents? Is it $5? Is it $100? I need to know that. Because if you tell me it is a massive number, let's say $100, again, just making it up, my options trade is going to be, well, hell, if it's going to move $100 and I'm really good at it, why don't I just buy a 70 delta call or even a 100 delta call for that matter, right? Mm-hmm. And why even hedge it if that move is $100 in this case? What do you think about that part of it?
Well, overall, I think that knowing that distance is the first question. But if you're only using options, my next question would be, what is its implied move? So, are the options expensive or cheap compared to the move that you want?
Okay, I'm gonna write this down so we have it. So first of all, IV, I'll just put high or low with arrows, right? I'll
that's good. But I mean, if you have that $100, you know what that answer is. You can, look at how much that option is, how much are the options projecting, even an at the money option, see how much it's projecting as a possible upside. Because if if it's say like an earnings thing or something like that, and it goes up $100, that option could be costing you $200 or something like that. And so, typically not, but you know what I mean? Like it's something that can affect your trade.
Right. What about delta? Okay, so if this were a big move, and I'm just using 100 to be emphatic, okay? Mm-hmm. We'll get to the small move in a second. What do we use? What kind of a delta would we think about for a straight option purchase to take advantage of this long move? Would it be 100? Would it be 50? Would it be a 30 delta? Would it be 70? My feeling is that I feel like a 70 delta is the number, but I don't know if I know why. It just feels right. Like a lot of things in my life.
I think the answer to number 2 is related to the question I asked, because if it's, if the skew is long or something like that, the delta could be, 100. Back when GME was at its meme-tastic, $100 move could be still like 60 delta. It could still be flat deltas. Okay. So I think that delta is the answer to the delta question would be answered by what is the option implied move.
Okay. Let's take it differently now.
Okay.
Let's make it a 50-cent move. Okay.
Okay.
Much smaller. Do your thoughts differ on what the option strategy should be now?
Well, I think it's the same question, but 50 cents typically is within the options implied move.
Yep.
So within the one standard deviation, I would $100, my first impulse is go long gamma. 50
Yep.
cents, my first impulse is go short gamma.
So does that mean in the up move here, sell a put or sell a put spread for that matter? So you're saving.
Or like a butterfly. I'm thinking like a
Okay.
butterfly in that area.
Yep.
I mean, really, when
Yep.
you start getting into that 50-cent short delta kind of time frame, you have to answer the question, the horizontal, what is this time frame?
Yeah, I'm going to put that down too, so I don't forget. I want to talk about that in a second. Okay, so if the move and I'll make some more candles that where it just kind of dies out. Let's pretend this is consolidating here at the end. So where would you put your short? So a butterfly is a 1 to 2 to 1 ratio. Okay, so I am selling 2, buying 1 for protection. And technically, folks, the butterfly doesn't have to be uniform. There's broken wings, meaning the first 1 by 2 can be $10 wide with the last one 5. It can be uniform. It can be crazy, right? Depending on your bullishness or bearishness, how to set that up. So let's just pretend it's standard. It's a $5 butterfly, 1 by 2 by 1. Do you kind of put your short one up in here somewhere? Your short 2 strike, we're at the top of the range, in your opinion?
I put my short a little bit above the projected price.
Above it, okay.
Yeah, because
why would you
get a little burst above and
yeah, it's just a little bit up in here.
Yeah, because especially if you have momentum going to the upside like that.
Yep.
What you're projecting is that it skids to a halt on a certain spot. It's a lot less likely than it blowing past your butterfly.
Sure.
So personally, I like to put my short strike a little bit above my projected price.
So someone's going to ask, why not just do a call vertical spread, a debit spread, a bull spread, and forget about the let's say the commission on the last leg. You're still hedged 1 by 1. Why wouldn't we do that?
So again, that question is answered by what is the options implied move. If it was $100 and the options implied move was 10, call spread is very good idea. Actually, probably like just a naked call is probably a good idea.
Right.
If it's something like $100 and the options implied move is like 70, 75, a call spread is probably the right answer.
Okay.
And then if it's, an option move that's 100, but the options are projecting 125 point move or something like that, that's when I'd start looking at butterflies, any kind of short gamma kind of strategy.
Sure. Right. Okay. Good. Do you ever use the broken wing?
All the time. I like broken wing.
I do too, because I get another direction that makes it fun. Meaning, if I'm wrong in that it goes way beyond my estimation, I still make money, which I love.
Right.
Because I do the bottom side $10 and the top side $5. So I've got a $10 spread on that I'm long, and I'm short a $5 one, right? So the net is 5 less what I pay for it.
Right.
So that I like a lot.
Yeah, I like broken wing butterflies when you are projecting pretty much what the option, like it's the same.
Yep.
But again, like you still have that delta kind of move. You have that directional victory in your strategy.
Sure.
The other thing I like about broken wing butterflies is, let's say you have like a 1 week time frame in that T, right? And you are very confident that price is going to reach there by the end of the week. But the first move of the market is down. And, for maybe like 2 days or something like that, you're sitting there languishing underneath the price that you applied it to.
Right.
You have but you are still confident that we will rally to that top point, technical analysis, whatever. You can essentially dollar cost average or whatever by selling that bearish wing of your butterfly at a profit. And then when the market does finally do what you ask it to, or do what you project it to, then you could sell the bullish. You could leg out with both wings at a profit. And that's pretty that's like one of my favorite trade plans.
Yeah, so but what you're saying is again, the broken wing is 2 spreads, right? It's a call spread, right? A long call spread and a short call spread, technically.
Yep.
That's exactly what it is. Now they don't have to be uniform, like we said. That's the broken wing part. And what you just said is if you put that spread on and the market kind of drifts down, the short call spread is going to be profitable.
Mhm.
If you take that off, you're going to be left with the bull spread one by one, right?
Mhm.
However many times you did it. It could be 10, 20, whatever, but still a one by one spread. If we get the move that we expect from our analysis, now you capitalize on that one as well, and you get a double win. I love that trade, by the way.
Me too.
So it's legging out of the butterfly without any exposure in terms of net risk, right? Because we're not
Right.
short any units.
Right. It's almost like you're getting that bull spread for cheaper because you're
That's right.
collecting the profits on the bear spread.
Right, and that's and what Jason's referring to too is that's a great risk management methodology, right? So you're managing the trade, you're making it better. It's all part, in my opinion, part of risk management. And when I say risk, it doesn't mean you actually have risk. It's just managing the inventory in an intelligent way, right?
Mhm.
Make sure if you have questions, drop them in the comments on here. We'd love to answer those. Feel free. I think if you're on X, you can do that. I believe so. I think there's a little comment box if you're watching on X. So send us a question if you
I
have
don't
a
think
comment.
I don't think I hit. I'm streaming to my audience.
Oh,
I
yeah,
better do that.
I think you are. So
I am. All right. Cool.
yeah, I think we do that automatically. So if you have a comment, please do it. Jason, adayumfunds.com. I always forget. You have so many different ones. Vol.land.
I do. We have three now.
Give me a plug real quick. Give me a quick plug on the .com part.
All right. So I mean, for the dashboard, I mean, if you're watching this, you are probably a DIY investor. You're trying to get insights on how to trade and stuff like that. The product that we typically market to your type of trader is www.vol.land. I spoke before. It is option dealer positioning where we ingest the whole Oprah feed every single trade. Yep. And we categorize it instead of making like assumptions on OI and stuff like that. So it's very data intensive, and it's a really great resource. It helps you see what the dealer's book kind of looks like. And how they would hedge it.
Yeah, no, I love it. It's a great product. I stand by it firmly. I love it. It's a great product.
Thank you.
Yes. Okay. Anything we missed here before we head for the hills? It's getting darn close to the weekend. You know what the weekend means for me.
Yeah, it means you're drinking.
I'm having a beverage that is lovely in the wine cellar. Yes, I will be having that. I'm trying
This weekend's actually very busy for me because I have a wedding tomorrow. My cousin's getting married.
Oh, good.
And then it's my wife's birthday, and my kids have a dance, and there's just so much going on.
So much. I don't have any of that.
A lot going on.
Yeah, none of that for me. Just a little pickleball, a little football, a little barbecue. That's it.
Nice.
Yeah.
Nice.
Yeah. So anyway, before we go relative to the trading world, I did a little trade yesterday. I'm trying a new product. I won't say what it is yet. I will do that next time maybe.
Okay.
But it gives indicators of flow. Let's call it. So not quite Volin kind of stuff, but where there's upward momentum, pressure, and downward, etc. And it gets you in typically on the long side. So I said, okay, I'll try it. I had a signal yesterday in Amazon.
Mm-hmm.
I did the unspeakable. I bought a call. I hate buying things, but I bought a call. I bought an at the money call. It's cheap dollar-wise. I was like, okay, what am I going to do with this thing? Nothing really happened. It kind of rallied a little bit, not to my point where I wanted to get out. I kept it overnight.
Yeah, it's good though, right?
Crazy.
What's the market doing?
Yeah, it was not a smart move because the signal is a short time signal. So I got out of this morning for a profit. It was total luck. Don't follow what I did. It was stupid. I'm just trying things. But the point of the matter is I did have a trade plan, and I did have an OCO on that order. So I had a stop price and I had a profit price. It did hit my profit price, but the point of the matter is that I was willing to take whatever my OCO gave me because I had the plan before I went in. So keep that in mind. If you do these things, make sure you have the exit strategy all worked out before you get there, right?
Yeah, and definitely, yeah. The exit strategy is very important. Like I've said, I think on this show a couple times, I can't tell you how many times somebody has texted me and said, "Hey, I'm up 10x on my Dogecoin. When do I sell?"
Yesterday?
Yeah. I always say now.
Yeah, right.
So you don't know when. If you don't know when, sell it now.
Yeah, unless you're the owner of Amazon, meaning Jeff Bezos, or Elon Musk, with Tesla or SpaceX, and you have a commitment to the company where it is your net worth, and I can never say when I made my first $1 billion as Elon Musk, when I sell out of everything, that's a lot of money. He said, "No, I believe in myself. I'm riding to the hills." Yeah. 200 million later, what do I know?
A lot of that, though, I think he uses that as leverage to get loans.
Well,
I think that's what most like billionaires do, is they use it as like leverage for margin, and they just kind of live their life off the loans.
Yeah,
the stock.
And then when they need to repay it, they sell a few shares, and that's that. They do take a tax hit though, right? When they sell the shares, so that's the difference.
I guess so.
All right, we got to go. Good to see you, man. Have a great weekend. Mark will be with us next week, I believe, on the Traders Workshop. And until then, for Mark, happy trading, right?
Happy trading.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.